Welcome back to Ivory Tower Economics YouTube channel, and today we're going to be looking at gold. So gold, excuse me, gold hit an all-time high last week. If you've been following my channel, if you've been following the news, you know that gold hit an all-time high, and since then it has pulled back significantly. So it was pretty much, I think, is a blow-off top for now. Like if you've seen some of my other videos, I think gold is going to kind of stay in this upper range. I think it hit the all-time high for this year, essentially. I think it's going to stay in this upper range until about maybe the second quarter of this year. But it's going to have a bias towards the downside. I do think it could correct another 20% from where it currently is. Probably somewhere down to, 2,000, somewhere between 2,000 and 3,000 bucks. I know it's a big range. Excuse me, sorry. But this is gonna. I think this is gonna take about a year, maybe a year and a half to 2 years for it to kind of get down there and kind of chop around in that range for a couple of years, and then we'll see another move to the upside into the end of this decade to 2028, 2029, 2030. That's my. Well, that's what I think. If if the run is gonna continue how it has in previous cycles, so gold usually has these like 10-year bull runs. But again, it kind of depends on when you start measuring the bull run. So if you start measuring the bull run from 2016, then we're 10 years in. If you start measuring from 2018, then we're 8 years in. So it kind of depends how you're measuring it. So it's really, I personally am in the camp that gold is going to run more into the end of this decade. And the reason why I think that is because if you look at the world economy, like global economies as a whole, they're not doing well. I also think that the S&P 500 is looking like it's really like running out of steam. Like it's pretty much for 3 months in a row at the same all-time high. Like I think it's like about like 1.5% difference from like November to this month. So if we don't see anything substantial, I think in the S&P 500 to the upside within the next month or two, I think there's more downside to be had. Another very interesting chart, excuse me, to be looking at is the S&P 500 divided by gold, and I've brought this one up several times on my channel already. If we look at it at a monthly, excuse me, we were talking about this support resistance level at 1.43. Gold broke down and closed the previous month. Now, although it had wicked way down, but I guess gold's crash, if you will, if you can even really call it a crash, but gold's big pullback in the last couple of days had the monthly candle close just below that 1.43 number, and it closed at 1.42, and now it has this month to open. This month it has reclaimed that very important support / resistance level. Although this is still a downtrend, it's below every single major moving average. It's below the red 5 exponential moving average, and this is a downtrend. And as long as the S&P is below essentially 1.96. It's a downtrend, right? It's a lower high. So can it bounce? Sure. I think it could bounce up. It could even excuse me, I just been getting over a cough. It could probably get all the way up to this yellow moving average at the 1.85, but gold would have to really break down at that point, like significantly. I mean, can it in the next couple of months? Sure. I would, but I think this is a downtrend, and I don't think this is gonna reverse unless the Federal Reserve starts printing money, and then that will flush, or that will create easier money, or an environment for easier money to exchange hands. And then in those types of environments, usually you're gonna see risk assets do better, right? And gold and silver and precious metals are not risk assets. They're usually like an insurance policy. They're safe havens. So when money is easy to come by, usually risk assets are gonna outperform, right? So the S&P 500, even though it's a pretty safe thing to invest in, is still risky relative to gold. So you're gonna see things not immediately, but you're gonna see things like the S&P 500, stocks in general, and then things like Bitcoin and things like other cryptocurrencies are gonna start doing much better in that type of an environment versus the environment that we have right now, where you could, is historically speaking, you could say that at least in the last like really 5 years, interest rates are high or high-ish. But if you look at them historically, they're still extremely low interest rates. So we'll see what happens. I don't think really the Federal Reserve is going to really lower rates much more than they currently have them. I really think that they're going to essentially keep playing this game. I believe in the news recently they're saying that Jerome Powell is going to step down, or he has already stepped down. He's had a replacement, something like this. I don't really care too much about that. I think it's mainly just a game. And the real monetary policy is essentially the words that they speak and what they're going to tell you, what they essentially tell you what they're going to do. That is the monetary policy. Actually, the adjusting of interest rates doesn't really do anything, because they've essentially go to the self-educated economist. He explains this stuff super well, but I think his theory is spot on, and it really explains a lot of the things that are going on, like super well, and he explains in a way that anyone could understand it, even I could understand it. So I think he's spot on with that. So I don't really see interest rates going any lower. They could talk about them lowering them, but that doesn't necessarily mean they're going to do it. And at the end of the day, the economy is essentially there's a very good saying for it, but essentially it's like everyone's emotions, right? The economy is kind of doesn't really make sense in many ways. It's like the mechanical spirit, if you will, of everyone's emotions, right? If people think times are good, then the economy does well. If people think times are bad, then the economy it does not do well, essentially, and you could see that reflected in the S&P 500. Obviously, there's more to that. Of course, I'm oversimplifying it. There's a lot more to it, but like in a very simple way, that's kind of how it works. So yeah, like S&P 500, I think this is bearish. The S&P 500 has been in a bear market essentially since December 2021 versus gold. We'll take a quick look at silver here. Silver as well had a blow off top, a crazy blow off top. Let's see. So it's essentially down like 40%. Yeah. So gold is down about 20%. Silver's down about 40%. Can it go back up to the upside? Maybe it's possible, but I don't think it's gonna go much higher really from where it currently is. I think we're starting to get into a territory that we had back, not necessarily here, not in the last bull run of silver, because it looks very different, right? It looks like this is like what is it called? A shooting star candle formation or whatever it's called. Anyways, I think it looks a lot like this over here. If you zoom in back here to like the late 70s, 80s. Let me see if I can zoom in better. Sorry about that, guys. It's kind of like this. It's kind of like this, right? So it's like you have this big drop down. Like you have this candle where it wicked all the way up and then it closed well below the entry essentially, or the opening of that month, and then it was just down from there, and then this massive drop after that. I think we've had a bigger drop initially. Let's take a look, because this drop here, no, actually that was huge, just 30%. So it's only, what would 40% look like we have currently? Yeah, so look at this. It's dropped all the way 70%. So I don't know. Can we see something like this from gold in the next month or two? It's possible. It's definitely possible. I think it's gonna be a little bit more secure, if you will, for a lack of a better term. But historically, silver is very volatile. So I think gold would do better. It would be a better hold right now. You're gonna bleed less. Yeah, you see like here in the last bull run, and even in this one, it was like it didn't just drop off immediately. It was like more like a slow bleed to the downside, and then this one actually dropped off very quick. Like first it dropped and then it kind of recovered a little bit. So you had that bull trap, and I think a bull trap is gonna happen in the next month or two, right? Who knows how much further silver will drop down? Maybe it could drop down to like 60. And I don't know. I couldn't tell you. I mean, I could do a Fibonacci retracement. I'm not going to do it right now, but yeah, it could drop another 20, 30, 40%. Because essentially it was in free space. It was like in price discovery, and it was just these numbers went haywire, which fantastic for any of you that were holding silver and sold at the top. Congratulations. But yeah, I do expect it to be quite choppy in the next month or two. I do expect a bull trap to start formulating itself in the next month or two, and then down and sideways. I don't think we're gonna have this yet. I think we're gonna look something like this, and then recover for the end of the decade in silver, both in silver and gold. But yeah, those are my initial thoughts on what's currently happening in the precious metals markets. Again, if you're liking the content, like, subscribe, drop a comment, and I'll see you guys next time. Take care. Bye.